Fine, guys. So we will revise chapter 6, which talks about basic overview on IGST, UTGST and GST compensation to states act. Only some basics about these three acts are covered in this chapter, guys. First, coming to IGST Act. IGST Act was passed by the central government or parliament or union government for levy and collection of IGST on interstate supply. That is, whenever the supply is made outside the state or outside the union territory, IGST would be levied. That is by the central government. Under Article 269A of the Constitution, IGST on supplies in the course of interstate trade or commerce is levied and collected by Government of India. That is nothing but central government, and such tax shall be apportioned between the central government and the destination state. Or it will be divided equally between them. Then IGST deals with or applicable with respect to interstate supply, which includes import and export of goods or services into India or outside India. So whenever there is an intrastate supply, CGST plus SGST would be levied. CGST is completely central government revenue, whereas SGST is the state government revenue. Then coming to intra-union territory, that is supply within the union territory. In that case, CGST will be levied and collected by central government, whereas UTGST will be levied and collected by the central government, but it will be used only for the development of the same union territory where the supply has taken place. And whenever there is an interstate or import or export of goods, then IGST would be levied by the central government fully, but half of it is the revenue of central government, another half belongs to the destination state. Then IGST is applicable all over India, including Jammu Kashmir. The maximum rate of IGST that can be levied is 40%, guys, which is equal to CGST plus SGST. Then coming to the charging section under IGST Act is 5, which is same as the charging section under CGST Act, which is section 9, with small changes. And IGST is applicable in case of interstate supply, whereas CGST would be applicable in case of intrastate supply. Both the sections has 5 subsections. What are those? We will see one by one. 5 subsection 1 will tell IGST shall be levied on all interstate supplies except on supply of alcoholic liquor for human consumption, which is completely kept outside the GST, on the value determined which is under section 15 of CGST Act, and at such rate not exceeding 40%. Means as per the law, they are keeping the maximum right for the government to levy tax under GST is 40%. Then coming to subsection 2, which excludes as for temporary purpose, they have kept 5 petroleum products outside the GST. The short form is PhD man. They are what all those? The IGST on the supply of petroleum crude, high-speed diesel, motor spirit, which is commonly known as petrol, aviation turbine fuel and natural gas. In short, PhD man. These products are the items have been temporarily kept out of GST, but it can be brought under the GST umbrella any day on the recommendation of GST Council. But as on today also, it is outside the GST. Then coming to subsection 3, here the tax will be paid by the recipient as notified by the government. Means section 5 subsection 3 is giving power to the government to notify certain goods or services on which the tax will be paid by the recipient. Then coming to subsection 4, here the government is provision is giving power to the government to notify when the supplier is unregistered, but where the recipient is registered, the tax has to be paid by the recipient. But all scenarios are not covered. Government has notified only few transactions on which the recipient will be paying tax under reverse charge mechanism. Sir, which are those scenarios is not a part of your syllabus. Then coming to subsection 5, whenever there is any supply of services which is taking place through electronic commerce operator and government if notifies it, then on that the tax will be payable by electronic commerce operator and not by the actual supplier. So this is all about 5 subsections of section 5. Then provisions are same for CGST as well as IGST, but it is given under separate act and separate sections. So value is also determined as per section 15 of CGST Act, whether the supply is intra or whether the supply is inter. Then the maximum rate of CGST rate is 20%, SGST is also 20%, UTGST also is 20% as per the law, and IGST is 40%. Then coming to zero rated supply, which is given in section 16 of IGST Act. Zero rated supply includes 2 things. Whenever you are supplied the goods outside the state or services outside the country, that is export, or whenever the supply is made to SEZ unit or SEZ developer, it is always zero rated supply. Whosoever outward supply is zero rated supply, they have 2 options to pay tax. They can supply the goods or export the goods outside the country without paying any tax, but they have to give some proof in the form of bond or letter of undertaking. Or else they can pay IGST and then claim the refund of the same. Then coming to UTGST Act, the Union Territory Goods and Service Tax Act 2017 intends to make a provision for levy and collection of tax on intrastate supply by the Union Territories. That is, whenever the supply is within the Union Territories. For GST purpose, there are only 5 Union Territories. What are those? Andaman and Nicobar Islands, Chandigarh, Daman and Diu, Dadra and Nagar Haveli, Lakshadweep, Ladakh. Whereas the remaining Union Territory with own state legislation are treated as states for GST purpose. That is Delhi, Puducherry and Jammu, Kashmir, for whom SGST would be applicable. Then coming to UTGST Act, Section 7 is the charging section, that is normal scheme. It is telling, as per Section 7 of UTGST Act 2017, Union Territory shall be levied on all intrastate supply within the Union Territory except alcoholic liquor for human consumption at a maximum rate of 20%. And on the value which is determined under Section 15 of CGST Act only. Then even on the 5 petroleum products, even today, none of the GSTs are applicable, whether it is IGST, CGST, UTGST or any cess also is not applicable on this 5 petroleum products, guys. Then all other provisions, whichever is covered under CGST Act is common. If it is not separately covered under IGST Act or UTGST Act, they are same as given under CGST Act, guys. Then coming to cess, the Goods and Service Tax Compensation to States Act 2017. When the GST Act was supposed to be implemented, many states had a argument telling that they will lose the revenue under indirect tax. Whatever they were supposed to get under the previous indirect taxes like VAT, CST, service tax and all, they will lose it under GST. So that is why the government promised them, if there is any loss of revenue under GST, then we will compensate that to the state. And how the government will compensate it is by charging, in addition to GST, on some selected goods like luxury and sin goods, the government would be levying cess in addition to tax, that is either GST, IGST, CGST, SGST. In addition to that, even cess will be levied. And separate amount will be kept for this cess. And whenever at the end of every 2 months, the amount will be released to the respective states and later the final adjustment will be done. Okay. Goods and Service Tax Compensation to States Act extends to whole of India including Jammu Kashmir. Then State GST Compensation to States Act 2017 provides for the manner of ascertaining the amount of compensation that shall be payable to states during the transition period of 5 years. That is, when this Compensation to States Act was passed, it was passed initially only for 5 years, but now it has been extended by the center on account of revenue loss attributable to the particular state under GST. It involves the following step. First, ascertaining the base year, which is 15-16, which it is already predetermined. Then identifying the revenue of those base year, that is 15-16, under previous indirect tax regime, which is now subsumed under GST. Means in 15-16, what is the revenue that particular state has got from the indirect taxes which are now subsumed under GST has to be calculated. That is nothing but projected revenue of that. Then what is the actual revenue under GST has to be calculated. Then compare both. If there is a loss of revenue, that would be compensated by the central government. The compensation shall be met from compensation cess, from which the provisions in relation to collection, payment, return, refund, etc. are given under this act. Some important points of this acts are: it provides for the compensation of loss to the states arising due to implementation of GST. So it is not promised for all the states. It is only for those state or union territory which is suffering loss under GST when compared to previous indirect tax regime, guys. The financial year 15-16 shall be taken as base year, and for that year, what was the revenue under previous indirect tax regime which are now subsumed under GST will be calculated. Then the projected growth rate of the revenue during the transition period for each year would be 14% per annum. So based on that, what should be the revenue under GST will be calculated for each year. Then total compensation payable will be projected revenue, that is under GST, minus actual revenue of state in that year. The compensation shall be released at the end of every 2 months period on the basis of provisional or estimation. Later, the final adjustment will be done based on the audit report given by Comptroller and Auditor General of India. The proceeds of the cess shall be credited to, means whenever the government is levying cess on any luxury or sin goods, that amount will be credited to a separate fund called GST Compensation Fund. And whenever the government is releasing any fund to the respective state, they will release it from this. Then no such cess shall be leviable on supplies made by a composition supplier. So for a composition supplier, irrespective of what goods he is supplying, the rates are fixed under section 10. So same rate will be applicable, and no, in addition, no cess will be levied, even though he's supplying luxury goods or seen goods. Then where the cess is chargeable on value of supply as determined under section 15 of CGST Act for all intrastate as well as interstate supply. Means whenever cess is applicable, it will be calculated on value of supply as determined under section 15 or as per the valuation rules, guys. So this is all about the revision of this chapter.